Hi everyone, welcome to a quick walkthrough of our EURUSD strategy on the H1 timeframe. In this video, I'll cover three things. First, the core logic, what the strategy is looking for, and how entries are executed. Second, the key performance statistics from a long backtest. And third, where you can find and download the strategy on Quant Monitor after registration. This strategy is built as a reversal breakout system. It does not enter at market and it does not try to predict the exact turning point. Instead, it waits for an exhaustion-style setup and then requires confirmation through a breakout trigger. Step 1 is the context filter. For a long setup, the EMA 20 is falling, showing bearish pressure, and price closes below the SMA 30. For a short setup, it's the opposite. EMA 20 is rising and price closes above the SMA 30. So the system is basically identifying stretched conditions where a reversal move becomes plausible. Step 2 is execution, and this is the key. The strategy uses pending stop orders placed beyond recent structure, plus a volatility buffer. For longs, it places a buy stop above the highest open of the last 30 bars, and then adds a buffer equal to 0.5 times the smallest range observed over the last 25 bars. For shorts, it places a sell stop below the lowest open of the last 30 bars and subtracts the same type of buffer. Why do this? Because it helps avoid noise and forces the market to prove direction before entry. The pending order is valid for only 1 bar, 1 hour, which keeps signals fresh. Duplicate trades are disabled and pending orders can be replaced as conditions update. Risk management is straightforward and rule-based. Stop loss is 30 pips, profit target is 100 pips, and there's a 50 pip trailing stop. There's also a time-based exit. If a trade lasts more than 24 bars, roughly 24 hours on H1, it will be closed. And finally, there's a Friday exit at 20 calls to reduce weekend gap risk. Now let's look at the headline results. The strategy was tested on EURUSD H1 using MT4, with M1 data as the base, covering the period from April 1st, 2004 to April 24th, 2024. Across that full sample, the strategy produced a total profit of about 4,130 with 521 trades. That's a meaningful trade count, which helps reduce the risk of judging the system on a small sample. Profit factor is 1.51, which means the strategy's gross profits exceed its gross losses by a healthy margin. Sharp ratio is 0.81. Not extremely high, but solid for a systematic approach that is not constantly in the market. Drawdown is one of the most important parts. The maximum drawdown is about 374.6, and the percent drawdown is 3.48%. Return to drawdown ratio is 11.03, which indicates decent efficiency of returns relative to the stress the system experiences. The win rate is 42.61%, which is below 50%, and that's perfectly fine here because the system relies on positive payoff asymmetry rather than high hit rate. Additional context, average trade is about $7.93, daily average profit is 0.56, and monthly average profit is 17.21. In this test, CAGR is around 1.74% and average yearly return about 2.06%. Always interpret these numbers in the context of the backtest assumptions and account settings. Let's go one level deeper, because in real trading, how a strategy makes money matters as much as how much it makes. The key statistic here is payout ratio, average win divided by average loss, and it's 2.04. That's exactly why a 42.6% win rate can still produce a positive long-term outcome. Winners are, on average, meaningfully larger than losers. In the report, the average win is 54.76 and the average loss is 26.84. The largest win is $100 and the largest loss is $31. Gross profit is $12,156.2 and gross loss is $8,026.2 across 222 winning trades and 299 losing trades. Now here's the practical part for expectations. The maximum consecutive losses is 9. So yes, you should expect losing streaks, and your risk sizing needs to be conservative enough to handle them. Trade duration is also informative. The average number of bars in a trade is 9.7 hours. Winning trades last longer on average, 15.24 bars, while losing trades tend to end faster, 5.59 bars. That's a healthy pattern. Losses are cut relatively quickly, while winners get room to develop. Finally, stagnation. The report shows stagnation of 842 days and stagnation of about 11.51%. That means the strategy can experience long flat periods where progress is slow. This is why strategies like this are usually best used as part of a diversified portfolio rather than as a single standalone system. To wrap up, if you like this approach, you can find more strategies on Quant Monitor, including systems for MetaTrader 4 and MetaTrader 5, as well as strategy quant source projects, chart code, so you can study the logic or build your own variants. Here's how to download it. After you register on our website, log in, open the strategy page, and you'll see the download section, typically a zip archive. Download it, unzip it, and then import it into MetaTrader, or open it in Strategy Quant depending on the package. As always, start on a demo account and validate performance with your broker conditions. Spreads, execution, and symbol specifications can change real results. And if you go live, keep risk conservative and consider combining strategies with low correlation for smoother performance.